Namaste, friends. Good evening. So, the two questions, that is eighth and tenth question, I was able to work. I thought the other two I will refer to, but I will separately work out and give you the answers also. Before progressing, the questions that are asked to me in the group for which I need to, in the privately, you ask me some questions like, where will these videos be accessible? I will provide you the link after today's class. I will provide you the link. And these videos will be accessible. Ana நமக்கு வீடியோ accessible இருக்குன்னு class வராம இருந்தாரு because this 4 days commit yourself to this 6 days commit yourself to DT in the specific time so that we are looking at the larger objective. Video இருக்குன்னு okay, video is just a complementary thing. Don't use it as a substitute. Listening in the classroom and clarifying your doubts and listening to others' doubt and getting clarification, both these things will work better for you. But I will provide you the videos, okay? And those who are having connectivity problems, technically there should not be any connectivity problem. Correct, Harita. Adan ketene. Our friend has joined. Okay, so technically there shouldn't be, but the only thing with regard to all Windows is shut down and restart. Friends, let's go to the eighth question for a minute. Okay, I will give you the answers which I have worked out. Okay, I will give you my answers. If there is any correction, please let me know also. Okay, net profit, add provision for taxation, refund of penalty should be reduced. Okay, insurance claim received on account that is treated as business income, no adjustment. Recovery of bad debts, it is assumed it is allowed earlier, no adjustment. Liquidated damages 490. Please understand, if you do an adjustment like this, the next line should be the depreciation for that. Never forget that. Never forget to immediately adjust the depreciation. If they have given depreciation as a separate item in the question, if we are going to answer depreciation, can you please mute it? Somebody, can you please mute? It will get recorded. Can you please mute? Yeah. So please remember that depreciation, immediate next line you should, whenever asset you make an adjustment, we worked out in the morning 3 years. In the middle year, we saw that the term loan of an asset has been waived and it needs to be adjusted with the cost of the asset. Whenever such adjustment takes place, ensure to, if the depreciation you are going to work out separately, fine, you can take it there and work out. If there is no separate depreciation given, immediately do the depreciation reversal also, because we have to assume that they would have provided, they would have taken it to the income. Now I am taking out of the income and reducing it from the cost of the asset. If the cost of the asset is reduced, then the already charged depreciation is higher, so I need to reverse it. So you remember this adjustment, my dear friends. I just took a representative sample of my friends. Some other friends might have also done this mistake. Please try to remember this point. Okay, always asset adjustment should be tagged along with depreciation adjustment. Okay, and then K&Co case law, defalcation is a normal expenditure. Convertible debentures ITC limited, regularization fees is disallowed. Abandoned without creating an asset is allowed. Medical expenses allowed. XJ forgings case law 7,10,000 should be disallowed. Skill development is only for the manufacturing. The weighted deduction is only for the manufacturing companies. This is not a manufacturing; it's a trading company. So you allow only 100%, no adjustment. Footbridge is allowed. Payment to trust for staff welfare allowed. Okay. Payment of interest and which is taken for giving advance allowed. Provision for gratuity disallowed. Actual gratuity, income tax paid. I think this should be the mistake, Harita. Just check it out. That is interest on loan taken for the purpose of paying. You send me the answer. I'm unable to verify it. Okay, so 9,800, and equalization levy. So I get 72,89,030. 72,89,030.
Sir, and personal expenses of MD, why is it allowed, sir?
I will tell you. MD, not only MD, generally any staff on official duty, if they become ill, okay, and the medical expenses are incurred by the company, it is as per the labor law itself, the company only has to incur. The law itself states if he is on official duty, the company should incur. So here the MD has gone on an official trip. Okay, so it should be incurred by the company. One. Number two, from a company's perspective, don't think it is a personal expenditure. அது வந்து company's perspectiveல அந்த மாதிரி ஒரு term வராது. It's all proprietor, partnership firm க்கு தான். But on the other end, even if it is not as per the agreement of employment, this will be taken as a perquisite in the hands of the MD and taxed. Medical perquisite in salaries chapter. So for company, you can claim the deduction.
Okay, sir. So Anga, I made a mistake, and this 24,000, I thought it was for one person. Into 248 போட்டிருந்தேன்.
Okay,
So அதான் mistake.
No problem.
மிச்சபடி everything else is
Okay, no problem. Any other clarification in the solution?
Sir, we are actually adding back provision for taxation, right? So why do we have to give adjustment for income tax rate also?
But the question says, I understand your question. Technically, the person should have adjusted the income tax paid against provision only. But the question says the following are debited or credited. So income tax paid is also debited. Probably it is not for the current year. It is for the past year. Now the assessment would have made and it would have been paid. So they have debited. That's why I am adding that. Okay. So that's why, Divya, I'm adding back here.
Sir, in case of actual gratuity paid, it is given that the following items are already debited. So why are they allowing it again?
Company had made a provision for gratuity 180. That a company actually paid gratuity of 24,000. Normally, the provision for gratuity and gratuity are interlinked. They will adjust it only. It's not a separate adjustment. It is within the, so only the provision will be made after making these adjustments to gratuity. So you have to necessarily, always this is the principle. Add back the provision, reduce the actual gratuity.
Okay, thank you.
For the 9th question, ICDS case law. For the 10th question, I'm getting 1,16,000. Our friends also got it. Okay. 7,000, 53,000 TVS Motors allowed. 41 liability foregone by the creditor. Scientific research add back 2 lakh, reduce minus 3 lakh. இங்கேயோ ஒரே ஒரு எரர் அந்த 225 போட்டிருந்த அது just check it out.
Okay, sir. Calculations.
Yeah, okay. So 12,16,000.
So just one doubt in 8th question.
Yeah, go ahead.
Sir, the bonus to employee welfare trust is disallowed, sir?
Illappa. It is deemed to have been paid to the employees. The trust should, if the trust is existing exclusively for the purpose of employees, and if you pay to the trust within the due date, in turn the trust distributes the bonus to the employees, it is allowed.
Okay.
Right, friends? We are going to continue some more time PGBP, and also tomorrow when we do our assessment of companies, okay, we might look at similar adjustments. Okay, now my focus is going to be on assessment of firm. My focus is going to be on assessment of firm. Okay, let me quickly run through the provision once. Okay, if later you feel that I want you to give that provision, I will definitely provide you. Okay. This is the consolidation of provision, which you will have in your classroom notes. Okay. Right. Please understand. Don't worry about what is the firm, etc., residential status. We'll go to the core provisions. Okay. We know share of profit of a firm is the exempt. Remember, this is exempt. Whatever may be, stress பண்றேன்னா, even if you are a resident and the firm is outside India, share of profit from a firm which is outside India, that is also exempt. A non-resident receives share of profit from a firm in India, that is also exempt. Okay, so however they talk, it is 10-2 is very clear. Share of profit from a firm is exempt in the hands of the partners. You need not worry about it. Okay. This is this concept of proportionate depreciation will be applicable. We will do a question and see, okay, where it is a conversion of a firm into a company or a LLP or an unlimited company into an LLP. Then this proportionate depreciation concept comes. Effective usage period. On the basis of effective usage period, you will divide it. This morning also we saw 40B remuneration to partners. Okay, either as per deed or as per act, whichever is less. There is only one thing I want you to remember, apart from the 3 lakhs which you will remember 12%. Okay, the amendment will be operative only prospectively and not retrospectively. Suppose on 1st July 2019 they have amended the deed to include interest on capital or to include remuneration. For the current year, only for 9 months you can pay it. You cannot pay it for the entire 12 months. It can be paid only for the period of 9 months. Okay, so this is the limit, 60%, I mean 90% and 60%. Okay, and the term remuneration includes everything. Interest on capital is 12% per annum. Interest on capital is 12% per annum. Okay, my dear friends, as we go on, in capital gains, I want you to remember some things. Okay, if a firm is converted into company, all the assets, if these conditions are satisfied, all assets, the amalgamation, merger, ellame neenga nyabagam vechirupinga. So that is enough. Okay, they should together own, the partners should together own 51% or more of the share capital for a minimum period of 5 years. The partners should together own 51% or more of the share capital for a minimum period of 5 years. Okay, that is an important condition to remember. Okay, there have been couple of questions in the past about this. Okay, unlimited company converted into LLP. Okay, the same with a small their share of profit in the 51% kadayadu. Their share of profit should be in proportion. Their share of profit should be exactly in proportion to their shareholding. Profit sharing ratio should be exactly in proportion to their shareholding. Okay, and introduction of asset by the partner is not important. Dissolution is important. Okay, yeah, okay, the asset okay, full value of consideration will be FMB on the date of distribution. Full value of consideration will be FMB on the date of distribution, and capital gains will arise only in the year of distribution. Idu edukkaga important na, suppose 31st March to 2020 the firm is dissolved. Ana, my assets are distributed to the partners only in April 20 or May 20. Now, it is only taxable in the financial year. Capital gain arises only in the financial year 2021, not 1920, because capital gains will arise only in the year in which the asset is distributed to the partners. Okay, and it is the fair market value will be taken. Okay, next most important area is set off of losses. Two provisions in set off of losses are important. Two provisions, listen to the provisions. Two provisions of set off of losses are important for a firm. Where there is a change in the constitution of the firm due to retirement or death of a partner. Why is the change? Due to retirement or death of a partner. Only this provision. Sir, change in constitution due to admission. Marandadunga. Change in constitution of the firm due to change in their profit sharing ratios. No problem. Where there is a change in the constitution of the firm due to retirement or death of the partner, that portion of loss which pertains to the retiring or deceased partner cannot be carried forward by the firm. That portion of loss which pertains to the retiring or deceased partner cannot be carried forward by the firm. Here, assessment of individual, later assessment of companies, எல்லாத்துலயும் ஒரு ground rule of exception. If the change is due to death of a partner, the legal heir or appointed for same benefits, you can get the contract law, the parent law of all laws gives us that benefit. Okay, there if the legal heir inga அப்படி sole proprietor, okay, death of a partner, spouse takes over, okay, the sole proprietor, okay, spouse takes over, the loss suffered by the late husband can be carried forward, or late husband or wife can be carried forward by the spouse. Okay, another question. Okay, Mr. X died. He had 3 sons. All of them together inherit. They will form themselves as a firm. They will form themselves as a firm and they will carry over, because legal heir will get the same right as like the other one. Okay, as like the person deceased. Then section 79 of the company's laws carry forward in the case of closely held companies. At least 51% of the shareholder who are there in the year of incurring losses on the last day should continue to be the shareholders in the year in which you propose to set off. However, if the shareholding has changed due to death of a shareholder and the legal heir has taken over, then you can still continue. A and B are the 2 shareholders. 60-40 is the ratio. A dies. Spouse of A gets the shares. Now, can the loss be, because B matram 40%? Yes, the loss can be carried forward. So, in the death of the associate, logically we go back to the contract law. Contract law has given the legal heirs will enjoy the same benefit. The legal heirs liability is also like that, which we will see now. Okay, so that is no problem at all. So, retirement or death, such portion of loss cannot be carried forward. Okay, change in the constitution due to other reason will not apply. The provision is applicable only for loss. Unabsorbed depreciation can be carried forward. If the change is due to death of a partner, the legal heir is appointed for the same benefits, then the firm can continue to carry forward losses. Okay, this is remember this. Okay, be sure it is stored in mind. It will, exam paper padichona, it will remember. If at all there is a question, we will get reminded of it. In the capital gains condition, okay, that is the part they should together own 51%. Suppose a firm is converted into a company and the firm has losses, the company can carry forward the losses. Very much yes, they can carry forward. But suppose if the section 47 condition is not fulfilled, okay, within 5 years they have transferred, then it will not be. Okay, AAA hospitalities நம்ம கிளாஸ் ரூம்ல ஒரு கொஸ்டின் ஒர்க் பண்ணிருக்கோம். அனிருத் அபிஜ்ஞான் அப்படின்னு ஒரு கொஸ்டின். Whenever you are finding time, just go through that. You will have a reasonable idea. Okay, of how this entire process work. Okay. Okay, I think we worked out in assessment of companies that. Okay, so you will have a reasonable idea. So remember, these are 2 things which are essential for set off. Okay, conversion of a firm into a company, you can set off all the conditions of 47. இதுதான் சொன்னேன். Conversion of company into LLP, okay, losses and unabsorbed depreciation can be carried forward. All the conditions, PSR should be in the same ratio of shareholding. MAT credit cannot be carried forward. நமக்கே தெரியும், ஏன்னா principle of computation itself is different. Logic தானே. 115 JB computation க்கும் 115 JC computation க்கும் miles of difference are available. So since the principle of computation itself is different, we cannot do that. Okay, now special liability, okay, which we know all the partners are jointly and severally liable. The assessing officer will catch hold of one partner. the assessing officer will catch hold of one partner and ask him to pay the liability. Assessing officer is correct because jointly and severally liable for any tax dues, etc. Remember, parent law, constitution, the contract law says to the extent they are inheriting the estate, the legal heirs will also be liable. Okay, other provisions, okay, can be carried out grants of partner in the case of dissolution of firm. Okay, interest on capital is not covered under ஒரு extra point நம்ம TDS காக கொடுத்தேன். Okay, ஏன்னா அது 194A interest on securities, interest other than security அந்த மாதிரி தான். Okay, interest on capital is not covered, but 195 ல if the capital interest on capital is paid to non-resident is covered. Okay, tax rate applicable is base rate 30%, which I have given in the material also. Charge 12% if the income exceeds HEC. Okay, இன்னும் ஒரே ஒரு point probably. Okay, இதுல நான் கிளாஸ் ரூம்ல அதுக்கப்புறம் நான் ஆட் பண்ணேன் ICDS provision. Okay, okay, இது என்னன்னா okay, in case of dissolution of a firm, okay, inventory has to be valued at NRV, net realizable value, only inventory. This is a special provision in the whole of ICDS. Firm can require a special provision. So somebody want to question you on ICDS, they can use it. Okay, in case of dissolution of a firm, inventory has to be valued at net realizable value. These are all the various consolidated provision. ஒருவேளை உங்களுக்கு இந்த sheet வேணும்னா I can copy it and paste it in our இது. But if you நம்ம work பண்ணிருக்கோம், if you remember, that is more than sufficient. Okay, I want to do one more thing before going to assessment of firm, because I want to consolidate the case laws, assessment of firm case laws. ரெண்டு case law, important case laws இருக்கு அங்கேயும். Okay, okay, என்னென்ன important case laws இங்க friends. இந்த M வெங்கடேஸ்வரா important case law. ஏன்னா AO தப்பு பண்ணா நமக்கு ரொம்ப நம்ம institute will always be happy, so they will always question it. Okay, partner introduced, okay, partner introduced capital. Is it visible or you want me to? Partners introduced capital into the firm. The partners were unable to specify the source of investing such capital. AO proceeded against the firm. This is the mistake of the AO. Okay, AO proceeded against the firm and taxed it as unexplained cash credit in section 68. Possible? No. Held by High Court that any proceeding against such unexplained can be only against the partners and not against the firm. Okay, the firm has explained the source of their credit. That is, partners gave me. Only the partners have failed to give the explanation. Hence, proceedings can only be initiated against the partners, not against the firm. Okay, this morning also I told you about that first question which we worked out, Harita Aishwarya, where I told you, okay, partnership deed does not specify the quantum of remuneration, but just specifies that remuneration will be paid as per 40B. Quantify pannala, but pattern of paying remuneration I have said. AO disallowed the entire remuneration, specifying the deed is silent as regard to the quantum. Is the AO justified? Held by High Court that the quantum need not be certain sum of money, but can be based upon certain limitation. Partners, in order to avoid conflict between the deed and law, they can mention that the restriction of 40B is applicable for book purposes as well. Okay, Great City Manufacturing Company, we have seen. Pramod Mittal case, which is also the genuine case but unfortunate case. Can loss suffered by a erstwhile firm be carried forward for set off by individual partner who took over the business of the firm. Provision. Firm to company, company to LLP, proprietor to company. So many provisions are there, but firm to proprietor, there is no provision. Section 78(2), which deals with carry forward of loss in case of succession of business, provides that only that person who has suffered the loss or his legal representative has the right to carry forward. Therefore, loss of erstwhile firm cannot be carried forward, by the proprietor. Not company can carry forward, mistake, by the proprietor. Okay, 4 case loss, some provisions can make us, other than this, everything PGBP. Okay, 4 case loss. Okay, honestly, this is the same time you should take when you are preparing also. 20 minutes to browse through the entire provisions of assessment of firm along with the case loss, and then we are directly going into some solutions. Any transfer of a capital asset by a private limited company or an unlisted company to LLP, okay, or any transfer of shares held by in a company by the shareholder on conversion of a company into NLP in accordance with 56 and 57 of LLP Act shall not be regarded as transfer for the purpose of levy of capital gains under section 45 on fulfillment of certain condition. Explain. We know what are all the conditions. Okay, the most important condition to highlight and write it, they should continue to hold the new profit sharing ratio in LLP should be in the same ratio in which they held the shares. Should be in the same ratio in which they held the shares. Okay, in the Excel sheet you will find the answer, but I'm not taking, just now I explained, so I'm not taking time for this. The partnership deed of a firm does not specify the remuneration. Appadinale Anil Traders, okay, Anil Hardware Koranganato, payable to each individual working partner, but lays down the fixation of remuneration. Then up to 1,150,000 or the, in respect of the balance 60%, book profit shall be as per incurred. Remuneration is payable to the working partner should be credited to the respective accounts at the same time, at the time of closing of the accounting year, and the working capital shall be entitled for equal remuneration. Can the claim of deduction in remuneration paid to the working, can they claim, can the firm claim? Yes, yes, there need not be a quantification. There need not be a quantification at all. Okay, remuneration 1 lakh per month, 2 lakhs per, there need not be any quantification. If there is quantification, I will compare and see. In order to avoid conflict, nama practically idana pandro. All of us, majority of our firms, we are just incorporating 40B provision. If there is an amendment to the provision, we fail to even remember that we have to amend the partnership deed also, and it continues with the only belief that the AO will not call for it. Okay, question number 3. The provision. Question number 3. X and Co., a partnership firm consisting of 3 partners, enhanced the working partner's salary from 25,000 per month for each partner to 50,000 per month for each partner. The increase in working capital salary was authorized by the deed of partnership. The AO, during the course of assessment, contended that the remuneration paid to working partners at 50,000 per month for each partner as excessive, and apply the provisions of payment to relative through the payment was within the statutory limit of 40B. Decide the correction of the action of AO. So, Great City Manufacturing Company. Great City Manufacturing Company, okay, okay, the assessing officer is wrong. For 40A to for payment remuneration to partner, 40B is the fair market value guiding section. 40B is the guiding section. This is third question is Great City Manufacturing. For all these, you will find the answer in our Excel sheet. Question number 4. ST & Co., a partnership firm, was dissolved, and as per the dissolution deed of the partnership firm, with effect from 18th September. Yes, one of the erstwhile partners, so Pramod Mittal. I mean, okay, the last of the case which we studied. Okay. Pramod Mittal case. Okay. So that is the question here. He took over the firm. These were the questions which are asked in the last few attempts. Okay, which are consistently repeating also. Which are consistently repeating also. All these are from the past attempts only. Okay. Question 5. Raja Kailash inherited as a co-owner plinth which he offered to tax under income from house property. AO taxed the income under the same head but treating all the co-owners as AOP. Correct? Huh? Correct? Huh?
No, sir.
Silence. I mean, louder.
No, sir. He's not right.
Yeah. No, he is not correct. Okay. Okay. This is the case. Sudhir Nagpal. This is a new case. Probably for our friends, this is a new case. Okay. Income from plinth. Whether is it taxable under IHP or IFOS, it should not be taxable under IHP. IHP is not taxable. We all know IHP, what is taxable. In IHP, land and building opportunity there too. That will only go to IHP. Further, would such income is inherited by co-owners be taxable in the hands, treating them as AOI, AOP? இதுக்கு முன்னாடி ஒரு Supreme Court judgment இருக்கு. Govind Bhai Mamaya. Okay, remember this case law also. ரெண்டுமே AOP க்கு. Land inherited by three brothers is compulsorily acquired by the state government. Whether the resultant capital gain will be assessed treating them as AOP held by the Supreme Court that the income from asset inherited by the legal heirs is taxable in their individual capacity and not in the status of AOP. இதே மாதிரி house property there is a specification here also held by the High Court that the income from letting out of plinth is assessable under IFOS and not under IHP. Co-owners have inherited the property from their ancestors and there was nothing to show that they acted as an AOP. Therefore, it is held that the rental income from the plinth has to be assessed in the status of individual and not AOP, and consequently section 167B, that is the provisions of inheritance, would not be attracted in this case. So please understand that there are two mistakes here. Okay, Raja Kailash inherited a co-owner which he offered under income from house property, which is wrong. Please quickly write down in your notebook. Okay, letting out plinth or earnings from plinth is not only land and building should be there. Okay, will be taxable under IFOS. Okay, inheritance and carrying out as co-owners doesn't mean they are AOP. It is taxable in their individual hands. It is taxable in their individual hands. Sixth question also, M. Venkateshwara. Naraya vaati repeat ana question. Amongst the first 6 questions, the question that has almost all the 6 questions are being repeated. Okay, among the first 6 questions, the 6th question is repeated quite often. Partners introduced capital in the firm. The partners were unable to specify the source of investing such capital. AO proceeded. Okay, this is M. Venkateswara case law where they cannot be assessed. The firm cannot be questioned about unexplained cash credit. The firm has given the detail. It is from partner. Only the partners have to give the specification. For all of you, I want to again tell you some ground rules. Okay, நம்ம வந்து கொஸ்டினோட length பார்த்து you should not get worried, because in the question, this is my examination question. Look at the length of the question. ஆனா நமக்கு கேஸ்லாம் தெரியும். Okay, what they are talking about, Anil had what, but like that in the yes limited question பாருங்களேன். Okay, so and so carried a business. Okay, 78 because of this he became a sole proprietor, he inherited, can the loss be? Okay, all these things might be, with the biggest storytelling part can be there in the question. Take your time, spend some time, because in the M Venkateshwara kuda, if you want to ask it as a bigger question, I can type it as bigger as some 4 partners. They introduced the capital. The firm was sent notice to be explaining. The firm sent that it is from the partners. Okay, but the assessing, the partners were unable to provide, so the assessing officer proceeded against the firm. It can be so big, the storytelling part. Okay, that too, for story writers like me, I can go on writing it, but that is not the point. I want you to understand that is not the point. The point is, get the crux of the question. Read it once or twice, you will get the crux. ஏன்னா நம்ம கொஸ்டினை பார்த்து இது என்ன அசஸ்மெண்ட்டுக்கு போறதா, எந்த இடத்துல போறது இந்த கொஸ்டின், we will always get jittery when we feel it, because if the 5 times the word assessment comes, you will always think, oh, 143 or 147. It's assessment of firm. Okay, so you please take time to understand the question, spend the time on the question. Okay, that will make you spend lesser time and correct time in the answer. Question number 7. PQR LLP, a limited liability partnership set up in a special economic zone in the financial year 15-16 for production of washing machines. We have done it. I want to repeat this answer. Okay, so 15-16 now. Okay, 15-16, 16-17, 17-18, 18-19, 19-20. Okay, we are in the 5th year. 100% can be claimed under 10AA. 100% can be claimed in 10AA. 10AA formula is, okay, profit, total profit into ET by TT, export turnover by total turnover. Export turnover means money brought into India in convertible foreign exchange, okay, or money retained outside India. That's both are export turnover. Now coming back. Okay, so we are in the 5th year. 100% can be claimed. Okay, the unit fulfills all the conditions of 10AA. During the financial year 18-19, it has also set up warehousing facility in a district of Tamil Nadu for storage of agricultural produce. It fulfills all the conditions of 35 AD. Capital expenditure in respect of the warehouse 75 lakhs, including 10 lakhs for cost of land. The warehouse became operational only from 1st April 2019, and the expenditure of 75 lakhs was capitalized in the books on that date. Relevant details are profit from the unit of SEZ, export sales, domestic sales, profit from operation of warehouse. Compute the tax and the AMT, including a examination question. Nowhere, okay, compute tax தான் நம்ம பண்ணிருப்போம், including AMT under section 115 JC. இதுதான் ஆன்சர்னு கொடுக்க மாட்டாங்க. Okay, so payable by the LLP for the assessment year. Let's go into the answers. Let's start working. Here surcharge will not come. Here surcharge will not come because total income has not exceeded 1 crore. And three things should be added. Three things. One is exemption. One exemption is 10AA. One expenditure is 35AD. Deductions are income based deduction except the last one. Okay, income based deduction. These should be added. And what needs to be reduced is depreciation, because you are adding the capital expenditure. Had I not claimed the capital expenditure, I would have claimed the depreciation. So depreciation needs to be reduced. Here it exceeds 1 crore. Here it exceeds 1 crore. So I need to do the surcharge also. Tax at the rate of 18.5%. Only MAT has been reduced from 18.5 to 15, whereas ATI, the AMT still remains at 18.5. So my normal tax comes to only 14 lakhs. Here it is 24 lakhs. Okay. Okay. According to 115 JE, tax credit to be carried forward. Okay. Difference between, okay, AMT and normal tax. Okay. This can be adjusted against the normal tax payable, maximum period 15 AYs. Maximum period of carry forward, my dear friends, is 15 AYs. Okay. Eighth question. ABC Private Limited was converted into an LLP called ABC LLP on 1/7/2019. Either again examination question I worked out in classroom, but I just want to recollect, revise once. You are provided with the following particulars of ABC Private Limited: unabsorbed depreciation, business loss brought forward, unadjusted MAT credit, written down value of the asset, plant and machinery, and the market value. Okay, plant and machinery of 50 lakhs, deduction claimed under 35 AD, building at 10%, 20 lakhs, market value 30 lakhs. Cost of land acquired in 2005, 50 lakhs, present market value 100 lakhs. Expenditure on VRS incurred by the company during the financial year 17-18 is 25 lakhs. Company has been allowed deduction of 5 lakhs each for 18-19 and 17-18 and 18-19 under section 35 DDA. He explained the tax treatment of each of the item above in the hands of the LLP, assuming that the conversion satisfied all the conditions of section 47. Okay, so parent rule, I'm going to one thing which I said in the morning, which we will repeat again and again. Provisions will apply to the transferee entity as it would have applied to the transferor entity had there not been amalgamation or conversion. But specifically in the MAT credit law, you cannot carry forward because the nature itself changes. The nomenclature of computation itself changes. Okay, and the mathன்றது இங்க AMTன்றோம். So there entirely it changes. Okay, so let's answer this. Okay, right. Unabsorbed depreciation. Okay, can be carried forward by the LLP and set off over the remaining period. Okay, sorry, there's no remaining period here, and set off against income. Okay, business loss of financial year 12-13, 13-14, 14-15, 15-16, 16-17, 17-18, 18-19, 19-20. I am in the 7th year. Yes, I can carry forward it and bring it and set it off. One more year I have. Before that I should have set it off. So remaining period is 1 or 2 years only. Okay, lost is lost, you cannot adjust it. Assets. Okay, LLP can record the asset only at book values or WDV prevailing in the transferor entity. Book value நம்ம சொன்னோம்னா okay, we are meaning income tax books. Income tax books means statement of income. Okay, for non-depreciable asset book value, revaluation needs to be ignored. In income tax, holistically everywhere revaluation needs to be ignored. So LLP can record the asset only at book values, which means land can be taken only at the original cost and not in the market value. Plant and machinery and all depreciable asset, okay, in the written down value prevailing in the transferor entity. Now, okay, plant and machinery, 15%, I can take it over this only at 10 lakhs. Okay, I can take it over only at 10 lakhs. Okay, I have something more to add. Okay, plant and machinery, okay, on which 35 AD is already claimed. So you have claimed the deduction. Now the value to be taken over is only nil. I cannot record any value. Asset register I can put it, but you cannot record any value. Building 10%. Okay, only at WDV I can take over 20 land. Okay, and land. Okay, original cost. That is nothing but the book value. Here I don't mean the books of accounts, I mean the income tax statement. Okay, so income tax statement we don't take land at all. That is your mistake. Okay, no depreciation now, it's an asset. Okay, so 50 lakhs. Okay, right? So please understand these are specified. Okay, now I am going into one other thing called depreciation. I'm going into one other thing called depreciation. Okay, please understand. For plant and machinery at 15%, for plant and machinery at 15%, okay, 1,50,000. For building at 10%, for building at 10%, 5 lakhs. Total depreciation, okay, is 6,50,000. Is 6,50,000. Total depreciation is 6,50,000. Understand? The law says it has to be distributed on the basis of effective usage period. Okay, for the company, it is April plus May plus June. Okay, the effective usage period is 30 plus 31 plus 30, 91 days. For the LLP,
Sir,
Building
building on the 2 lakh.
sorry,
20 lakhs at 10%.
yeah. Thanks. Okay, for LLP, okay, பெருசாலாம் அப்படி பயங்கரமாலாம் பேசுறாங்க அப்படிலாம் ஒண்ணும் இல்லை. இந்த வருஷம் 366 days ஞாபகம் வச்சுங்க. Don't forget அதுக்கு இது அவ்வளோலாம் யோசிக்க வேணாம். Okay, just 366 days this year. So 91 is to 275. 91 is to 275. So how to, okay, depreciation for the company will be, my dear friends, okay, 3,50,000 into 91 divided by 366. Okay, depreciation for the LLP will be the balance. cost of land. Okay, expenses on VRS incurred in 1718. Okay, 25 lakhs. Okay, this is allowed in 5 equal installments. Okay, the company has already claimed 2 installments. Okay, so company would have claimed 10 lakhs. Okay, company would have claimed 10 lakhs. Okay, okay, LLP should carry forward the unclaimed portion and claim it over remaining period. So which means rupees 5 lakhs for 3 years. Okay, for 3 years, rupees 5 lakh each year. Okay, you will be able to correct. Okay, I'm not ruling out such possible questions. I'm not ruling out such possible questions in the provision law. I'm also touching upon, because suppose if there is a small adjustment in your MCQs, using this provision, you know how to answer that. Okay, that's why I'm also touching upon, very much touching upon. But these things, store it. That's all. Store it once. Okay. Question number 9. On 1/4/2019, Binu Limited of Delhi, a domestic company engaged in the business of manufacture of metro railway seats, converted into LLP by the name of Messrs. Soumya LLP, fulfilling all the conditions specified in the income tax law. Some of the relevant information is given below in respect of Binu Limited. VRS expenditure incurred in the same 20 lakhs. The company was allowed 4 lakhs for 2 years. 150 equity shares of Toyo Limited, an Indian company listed in the Bombay Stock Exchange, was acquired for rupees 1,900 on 31/7/2017. On conversion, these became the shares of the LLP. Besides other assets transferred, Messrs. Salmi LLP by Mrs. Benu, it also transferred factory building. On 1/4/2019, Soumya LLP leased out one of the factory building along with plant, machinery and furniture at a consolidated lease rent of rupees 50,000 per month. What is my main business? My main business is manufacturing of metro rail seats. This is my main business. So leasing is not my main business. So this will go to my IFO. Yes. Okay. This is a comprehensive rent for all amenities. Only house property, yeah, it will go to house property. Only building, it will go to house property. This has everything. So this will go to IFO. Yes. This lease rent will go to IFO. Yes. During the previous year 1920, Messrs. Soumya LLP earned a profit after debiting or crediting the following account to its profit and loss account. I'll just verify the source question whether the profit is available. Just give me 2 minutes. I will complete all the adjustment. I know 2 mistakes are there. Profit is not there. Depreciation is not there. I will just check the source material and see. Mr. Binu is the working partner of the LLP. He is also working partner in another firm. He is actively engaged in the business of both the firms. Binu gets a salary of 55,000 per month, and the same is authorized by the deed. Mr. Ayushman, an employee, was deputed to work in the client office in Mumbai for 3 months. The LLP has paid the salary rupees 40,000 per month in cash. Okay, no problem. For Rule 6DD says, if the employee is placed outside the place location for a temporary period is 90 days, which is 3 months, you can definitely pay by cash. Here, he has been paid by cash, no problem at all. This is an exception specified in Rule 6DD. Amount of 25,000 was paid towards penalty for non-fulfillment of delivery condition of a contract of sales. It is not a penalty for violation of law. It is not a penalty for violation of law. It is a breach of contract. It is a breach of contract. Expenditure to the person giving, income for the person receiving. It is not violation of law. LLP has provided an amount of 18 lakhs being the sum estimated as payable to workers based on agreement to be entered with the workers union. This morning we saw this is allowed as per ICDS provision. This is allowed as per ICDS provision. Depreciation, this is also missing information. This I noticed. 2 minutes. After the question is over, I will just let you know. Gratuity provision based on actuarial valuation rupees 65 lakhs. Gratuity actually paid 4 lakhs to the retired employee debited in the gratuity provision. You know what to do. Profit on sale of Messrs. Tayo Limited shares. These shares were sold for 2,750 per share. The highest price quoted on 31/1/2018 was 2,200. Remember, it's a listed share. Repair to plant and machinery 59,000 in respect of plant and machinery given on lease. Factory license fees paid 15,000 for each factory building. Legal fees include 26,000 paid to an advocate for drafting and registering the lease agreement. Additional information: under an arranged agreement of debt restructuring, the bank has converted unpaid interest amounting up to 31/7 into a new loan repayable in 3 annual installments. The first installment, so 43B, these would have been already disallowed. Now whatever is paid, you should allow it. You should allow it. Mr. Binu, being a working partner, bought a car which is registered in his own name out of the funds of LLP. The car was used exclusively for the purpose of business of LLP only. The depreciation on the car of 15,000 for the financial year 1920, which is not included in the depreciation amount debited to P&L. Okay, A. Sivakami and Co. Depreciation as per IT law, including depreciation on the assets given on lease amounting to 90,000. It does not include the depreciation on car. The LLP sold import entitlement license 150. This sum is not included in the profit and loss account by treating it. You are required to discuss the implication. Okay, so fantastic question which has a lot of adjustment. I need to give you 3 adjustment. What is the profit? What is the depreciation? And then the bank converted unpaid interest amounting to. Give me a minute. No problem. நான் எங்கே நிறுத்தினேன்னு எனக்கே தெரியாது. Actually, I'm unable to find. I'm unable to find. I'll give you some arbitrary values because the most important part is the question understanding. So kindly bear with it, and I'll give you some arbitrary values. Okay. Um, okay. I'm just giving you some arbitrary value. Earn the profit of 10 lakhs. Please write it as earn the profit of 10 lakhs. Please write it in your notebook and keep earn the profit of 10 lakhs. Let's take depreciation as 6 lakhs and okay, and this also as 6 lakhs. Unpaid interest also as 6 lakhs. Okay, 10 lakhs as profit. Depreciation as per book 6 lakhs. Unpaid interest is in the additional information. One is also 6 lakhs. Important is not the amount. Important is understanding and doing the solution. Don't want to waste your time. நான் டைப் பண்ணேனா என்னன்னு தெரியல நேம்லாம் பார்த்தா நான் டைப் பண்ண மாதிரி இல்ல பட் ஸ்டில் I don't want to waste the time now. Okay, so okay, computation of business income of okay Soumya LLP. Okay, Soumya LLP. Okay, computation of business income of Soumya LLP. Okay, net profit as per P&L account. Okay, not in question. So okay, so I have given the value as 10 lakhs because tomorrow when you look at the question and just answer without looking the video, you should not miss it out. Okay, right. I am taking 10 lakhs. Okay, let me go on with the question. Okay, 25 coffee. Sorry. VRS compense expenditure incurred in 17, 18, 20 lakhs. The company was allowed deduction of 4 lakhs for 17, 18 and 18, 19. So the LLP can carry forward. Okay, right? Okay, VRS expenditure amortization. Okay, right? Unamortized amount to be carried forward and amortized over balance period. Okay, so I can claim 4 lakhs this year also. I can claim 4 lakhs this year also, my dear friends. 150 equity shares, it is only shares. Let me look into it later. Besides other assets, it also took over a land and building, factory building. On 114, it is leased out the factory building at a lease rent of 50,000 per month. Lease rent of 50,000 per month. Okay. Lease rent on let out of factory building and amenities. Taxable under IFOS. Taxable under IFOS. So it is 50,000 per month into 12. Okay, 6 lakhs. Okay, don't worry about even if it comes as a loss. Don't worry. Information is not this 10 lakhs is just an what we are trying to understand is each and every adjustment and its best manner. Okay, so don't worry about the profit. Okay, Mr. Binu is the working partner of a LLP. He is also a working partner. Okay, so remuneration to partner. First, I will add back remuneration to partner. I will add back. I will add back 6,60,000. Okay, then okay, cash payment to employees. Cash payment to employees outside the base location, okay, will be allowed as it is an exception 248.3, and this is an exception to 48.3. You can allow it. Okay, so there is no disallowance there. 25,000. Okay, um, compensation for breach of contract. Okay, compensation for breach of contract is a okay, what is the wordings I asked you to remember? Is an expenditure in the ordinary course of எதெல்லாம் உங்களுக்கு புரியலையோ அதுக்கெல்லாம் இதுதான் in an ordinary course of business. Okay, it is an expenditure in the ordinary course of business. This is not penalty, as it is not violation of law. So it will be allowed. So no disallowance here, no disallowance here, my dear friends. It is allowed. The LLP has provided for 18 lakhs, being the sum estimated as payable to workers based upon the agreement to be entered with the union on the wage revision once a year. This is based upon, okay, according to the provisions of ICTS 10. Okay, 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 provision made on the basis of past data, okay, is allowed as deduction. This is more like mercantile basis of accounting, so it is allowed as deduction. Okay, it's allowed as deduction. Depreciation, I asked you to say 6 lakhs. I'll also write it here. Okay, not mentioned in question, because if you later refer to the answer, you should not get confused. Okay, gratuity, provision for gratuity is 6,50,000. Actual gratuity paid. Actual gratuity paid is 4 lakhs. Actual gratuity paid is 4 lakhs. Okay. Then profit on sale of, okay, profit on sale of shares, okay, to be treated under capital gains. So how much is the profit made? They have sold it for 2750. They have sold it for 2750. It is taken over. It is taken over at 1900. Okay, they have sold it for the per share 1900. There are 150 equity shares. Okay, and it is sold for 2750. Please remember, it is 1000. Okay, 2750 minus 1900 into 150. Okay, 1900 is the purchase price, 150 is the number of shares, 2750. Later when we work LTCG, I will tell you how it works. Okay, so 2750 in minus 1900 into 150, so minus, okay, 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 1 lakh. Okay, profit on sale, it should be taken to LTCG. It should be taken to LTCG. Later we will see. Okay, repairs to plant and machinery rupees 59,000, which has been given on lease. You can claim it in IFOS. Repairs to, this is not a business expenditure. Plant and machinery given on lease. Repairs to plant and machinery given on lease 59,000. 59,000. Okay, similarly factory license fees paid 15,000. Factory license fees paid. Okay, I'll do it in under IFOS, that wordings 15,000. Okay, and legal fees for drafting lease agreement. Okay, lease agreement 26,000. These are all not a business expenditure, so I have added it back. under an agreement for debt restructuring, the bank has converted unpaid interest amounting to, I asked you to say 6 lakhs, or up to 31/7 into a new loan repayable in 3 equal installments. The first installment was paid in, okay.
Sir, just one doubt.
Go ahead.
Repairs to plant and machinery on lease, அது normal business expenditure மாதிரி நம்ம
Yes, sir. It should be allowed in 56, 57. The IFOS, because the building has given on lease, it goes to the rental income goes to IFOS. All these expenditures should be claimed in IFOS.
And இந்த ஃபேக்டரி லைசென்ஸ் ஃபீஸ் இருக்குல்ல, அது இன்டான்ஜிபிள்ஸா ட்ரீட் பண்ணி டெப்ரிசியேஷன் போட கூடாதா?
Is it a license fee? Single one-time license fees தான் into இது. Okay, this is renewable license fees or one-time license fees. The quantum seems to be renewable, so I have taken it like this. Okay, but the one-time license fees நீங்க சொன்னது correct.
Okay sir, okay sir, thank you sir.
Okay friends, okay, interest which is converted into term loan, okay, installments paid before end of the year will be allowed as deduction. Okay, again amount not given in question. So what happens is out of 6 lakhs which I asked you to, okay, 3 installments, okay, 1 installment is paid, you will allow 2 lakhs. This interest would have been already disallowed, so allow 2 lakhs. Okay, Mr. Binu being a working partner brought a car, so you can claim. Okay, I will write it along with depreciation. Okay, depreciation. Okay, depreciation as per IT law. Okay, depreciation as specified. Okay, depreciation as specified 8,10,000 less depreciation for leased asset where you can claim it under IFOS 90,000 including depreciation of asset given in lease 90,000. I will write the note there, don't worry, 90,000. Okay, okay, add depreciation on car, according to, okay, A. Sivakami and co. Okay, it is held that the beneficial owner can claim depreciation. Okay, so registration is just a formality, so this is 15,000. Okay, okay, the LLP sold import entitlement to 1,50,000. Okay, any export incentive will be treated as business income according to section 28. So this 150 should be treated as business income. This 150 should be treated as business income. So what I now get is known as book profit. What I now get is known as book profit. Okay, 6,97,500. Okay, less maximum permissible remuneration. Okay, as per deed you are given 55,000 to one of the partner, 6,60,000. As per act, please understand my working for a minute, please understand my working, my dear friends. Okay, 6,97,500 minus 3 lakhs into 60% plus 2,70,000 In other words, on the first 3 lakhs, 2,70,000, balance 3,97,500, I can claim 60%. So 3,97,500 into 60% plus 270. So whichever is less, okay, whichever is less, I will claim it as okay, remuneration. What I now get is known as business income. What I now get is known as business income. What I got it is known as a business income. Okay. So this is how we need to various items and its treatment. This gives you a grip on PGBP chapter. Okay. Now I am going to also specify the other provisions so that you will get a comprehensive look. Okay. Computation of total income. Okay, computation of total income. Okay, one, business or profession. Okay, as computer 1,89,000. Okay.
So in the ninth adjustment, they've given the factory license fees for 15,000 for each factory building.
Yeah, friends. Factory license 15,000 for each factory building. Only one factory is leased. If you look at the okay, probably I should have explained it more clearly. Okay, besides the other asset, it also transferred 2 factory buildings. Messrs. Soumya leased out 1 factory building along with plant and machinery. So for the other factory building, it will be a business expenditure. For this one which has been leased out, it is not a business expenditure. That's why I added back 15,000.
Okay, sir.
Am I clear to you, friend?
Yes, sir. Sir, one more small doubt.
நான் ஸ்மாலா இல்லையா நான் டிசைட் பண்ணிக்கிறேன் சொல்லுங்க.
இல்ல சார் அந்த leased out income it's not a part of net profit that you gave, no sir, because அது வந்து it is above that adjustment, so should we again reduce it from the net profit?
Actually, friend, in the earned after debit or credit, these 3 adjustments is not that it is not part of the net profit. Obviously this will become a part of P&L account. On a safer side you can write it, but இதுவும் சரி இந்த share sale சரி it will form part of P&L account. Vaguely remember it is part of P&L account, but exactly in the amount மேலையா கீழையான்னு don't worry about it, but it is part of P&L account.
Okay, sir.
Okay. So
can you show the workings once, sir?
For which one?
Business income.
Yeah.
All the adjustments.
Okay, you want the adjustments once more? Okay, so 10 lakhs, I have taken that the profit as 10 lakhs. DRS compensation, I can reduce 4 lakhs. Lease rent, I have to reduce 6 lakhs, okay, because it is going to be taxable under IFOS. Remuneration to partner, I first added back 6,60,000. 48.3 no disallowance because there is an exception. Compensation is not penalty, so it is normal business. Wage is not a revision. I mean, wage revision is part of ICDS, so taken. Depreciation 6 lakhs. I made it as 6 lakhs and disallowed. Provision for gratuity 6,50,000. Actual gratuity paid reduced. Profit on sale of asset, I am going to work out LTCG on that. Repairs on sale of machinery because it is going to be reduced from lease 59,000. Factory license fees paid. Okay. Disallowed for the lease factory alone. Okay. So for 15,000. Legal fees for drafting lease agreement 26,000. Interest, I took it as 6 lakhs and allowed 2 lakhs. Depreciation 810 plus this 15 not charged, so 835 minus 90 for the lease rent, leased asset, and export incentive is a business income. So I get 697,500. Remuneration I am getting 508,500. Are you clear, Divya?
yes, sir.
Capital gains. Now again, I know you remember, once more to recollect. Full okay, capital gains இங்கே எழுதிடுறேன். Okay, taxable under section 112A. Taxable under section 112A. Okay, taxable under section 112A. Okay, full value of consideration. Okay, we all know it is sold for 2,750. It is sold for 2,750, 150 shares. So 150 into 2750. Okay, less. Okay, sorry, less COA. Okay, remember, indexation benefit cannot be provided even if it is a long-term asset. 112A says no question of indexation benefit, so less cost of acquisition. How to find out the cost of acquisition? Okay, right? It is a two-step manner. Because for all assets purchased, all listed shares purchased before 31/1/2018, this is the methodology of computation. Step 1, okay, FVC or FMV as on 31/1/2018, okay, 31/1/2018, whichever is less. So I will compare 2750 and 2200, whichever is less. 2750 or 2200, whichever is less. Step 2. Okay, answer of step 1. Okay, with actual COA, whichever is higher. Okay, again 2200 or 1900, whichever is higher. So our 2200 will prevail. Our 2200 will prevail. Okay, here whichever is less. Okay, here whichever is higher. So our 2200 will prevail. 150 shares into 2200 gives me 3,30,000. Gross LTCG, gross LTCG 4,12,500, 3,82,500. Exemption to be claimed, okay, up to rupees 1 lakh, because up to 1 lakh this is not taxable. So 82,500 you claim it as exemption, nothing is taxable. Nothing is taxable. Okay, for long I have kept waiting whether this is exemption or non-taxable portion. Repeatedly it is said as exemption, 1038 exemption, so let us take it as exemption. Okay, IFOS, lease rental of factory. Lease rental of factory, 55,000 into 12, 6,60,000, less all direct expenditure including depreciation. That is what is allowed for these things. Even though you take it under IFOS, IHP na rent-day deduction da, standard deduction, interest on borrowed capital. IFOS na all identifiable expenditure will be allowed as deduction. All identifiable expenditure will be allowed as deduction. Okay, my dear friends, these three will be allowed as deduction. That is, repairs to plant and machinery, all these three things can be allowed as expenditure. All these three things will be allowed as expenditure. Okay, okay. So this is 59,000. Okay, 59,000, 15,000, 26,000. Depreciation, okay, is 90,000. Okay, 470. Okay, total income. Going to the next question. Hind Udyog, a manufacturing firm, okay, no only additional depreciation, others are only for companies, okay, consisting of 3 partners, provides the following information. Net profit as per P&L account was arrived at after debiting or crediting the following. The firm has provided 2 lakh being sum estimated to workers, so ICDS 10. Sale proceeds of import எல்லாம் examination question கொஞ்சம் adjustment தான் நான் extra போட்டிருப்பேன், which means இதெல்லாம் repeated adjustment circle around somewhere only. Okay, we only think நம்ம fear தான் some okay, adjustment circle around a few areas அவ்வளவுதான் கேட்க முடியும். Okay, sale proceeds of import entitlement license credited to P&L, which the firm claims as capital reserve. GST demand notice, demand paid includes 5,300 charged as penalty, which is disallowed, delayed in filing. 12,750 interest for delay in deposit of taxes. Okay, remember, interest is allowed, whereas penalty is disallowed. Whereas interest under Income Tax Act is disallowed because that is specifically said. An income tax is disallowed, that interest is disallowed. But whereas for other acts, interest is not violation of law. Okay, it is not ultra virus law, it is intra virus. So whereas penalty is ultra virus, so it is disallowed. This morning also our friend asked us this. A group free ad ticket was provided by a supplier for reaching a certain value of purchase in 1920. The same is not credited in P&L account because it was encashed by in April 2020. No, it is for the financial year 1920. So you should take it as income. You should take it as income. Okay, it is a perquisite, should be treated as income. Interest amounting to 20,000 paid to X as a karta of HUF, not in the capacity of a partner. He gets the interest. Okay, he gets the interest as karta of HUF. This falls under 40A subsection 2. 40A subsection 2. In the interest பொறுத்த வரைக்கும் I am telling you 3 things. Please remember this. Please, if you want, note it down somewhere or remember this. Interest paid to the partner, be it on loan or capital, it can only be 12%. Be it on loan or capital, you can, just because it is paid in loan, you cannot get more than 12%. Then every partner will only contribute loan, not capital. So be it loan or capital, interest paid to partner is only restricted to 12%. Capital na disallowed under 40B, loan na disallowed under 40A subsection 2. Then interest paid to spouse of the partner. Third, interest paid in the representative capacity. The first one is interest paid to the partner, be it loan or capital, 12% only allowed, my dear friends. That's fair market value. Okay, because it is said within the law. Interest paid to spouse or relative of partner, interest paid to the partner himself, but in a representative capacity. Both are covered under 40A subsection 2. Fair market value, okay, normally FMB 18% வரைக்கும் allow பண்ணுது. Okay, fair market value 18. So you should write it is assumed that the rate, okay, it is within the fair market value. You should say this is falling under 40A2, but it is assumed it is within the fair market value, so nothing is disallowed. So that, yeah, 18% வரைக்கும் normal allow பண்ணுங்க. ரொம்ப 24-30% na you disallow a particular quantum. அந்த மாதிரி கொடுக்க மாட்டாங்க because uniformity of answer இருக்காது. So 18% வரைக்கும் it's like a thumb rule, so take it. Okay, the firm had taken on lease a building for the purpose of locating its business. Due to old age of the building, it was demolished and a new building was constructed, which is used by the firms from September 19. In the money date கொடுத்தாலே the importance is more than 180 days, less than 180 days, due date of filing returns, or 43B. இந்த மாதிரி எதுக்கோ தான் date கொடுப்பாங்க. Okay, they will not give date otherwise. The cost of new building is 10 lakhs, was written off as revenue expenditure. The lessor permitted to have 20 years. It should be depreciated. Loss incurred in the transaction for purchase of sale without delivery, speculation loss, should be disallowed, and it can be carried forward and adjusted only against speculation income. A scheduled bank sanctioned and disbursed a term loan in the financial year 15-16 for a sum of 50 lakhs. Interest of 8 lakhs was in arrears. The bank has converted the arrears of interest into a new loan of 10 equal installment during the year. The company has paid 2 installment and the amount so paid has been reduced from funded interest. No, it should be reduced here. Okay, actually it was adjustment la தான் வந்திருக்கணும் இது original question la it was there in adjustment not debitor or creditor because it has been reduced from funded interest in the balance sheet not from P&L. It should have come down as additional information. Okay, the firm furnishes the following additional information. Provision for audit fees of 2.5 lakhs was made for the year ended 31/3/2019 without deducting tax at source. Such fees was paid to the auditor in September 19 after deducting 194J and the tax or deducted was paid in so. Last year I would have disallowed 70%, I mean disallowed 30%. During 1920, allow that because it is rectified. It is paid in 7th October 2019. So last year I would have disallowed 30%. This year allowed. The firm had made an investment of 23 lakhs and 12 lakhs on construction of 2 warehouses, excluding cost of land in the rural areas for the purpose of storage of agricultural produce and edible oil, respectively. These were made available for use from 15/9/2019, date is relevant. The profit from setting out warehousing before claiming 35 AD and 32 is 15 and 5 lakhs. Okay, edible oil does not qualify, only agricultural warehouse qualify. Okay, edible oil will be taxable. I will work out and show you. In July 19, the firm received a dividend of 11 lakhs from A Limited in which it holds 10% share. Domestic dividend up to 10 lakhs is exempt. More than 10 lakhs it is taxable at 10%. You are the last exam to write about 115O. You are the last exam to write about 10 lakhs exemption. The firm till the financial year 18-19 had 4 equal partners, W, X, Y and Z. W retired on 31st March 2019. He was settled by the firm on 11th January 2020 by transfer of land which was purchased in 15-16 for 11 lakhs. Stamp value on the date of transfer is 26 lakhs. Business loss brought forward 6 lakhs, brought forward unabsorbed depreciation 16 lakhs. Compute the income by analyzing, integrating and applying all the provisions. Extremely brilliant question with all adjustments. Let's do it. First time computing business income. I am doing it in absolute values. This morning, Aishwarya asked me if I look at the some suggested answers, RTP, they have addition separately, deletion separately. Add items are accumulated and then less items are differently done. Should I do it or can we follow this format? I can tell you that this format is also followed by institute in many questions. That is going line by line. ஏன்னா the addition reductionல நீங்க waste பண்ணுவீங்க டயத்தை. தேர்ட் வந்து ரிடக்ஷன்னா நீங்க முதல்ல அடிஷன் முடிச்சிட்டு ரிடக்ஷன் வரணும்னா யூ வில் வேஸ்ட் டைம். ஓகே, இன்ஸ்டிடியூட் மெட்டீரியல் அண்ட் இன்ஸ்டிடியூட் ஆர்டிபி எழுதுறவங்களுக்கு வெட்டியா தான் இருக்காங்க இந்த மாதிரி. ஸோ தே வில் ரைட் எவ்ரிதிங். They have their own time. We don't have time. So let us go adjustment way. Then only you will not miss any adjustment. For that purpose also I am making this format more popular to you. Okay, that is one thing. So this format is not that you should not do, you can do. This is an acceptable format. There are answers and suggested answers which they have done in this particular format. And the May 2020 paper la நீங்க பாத்தீங்கன்னா the depreciation நீங்க since you saw I am telling you and the depreciation கன்சிடரே பண்ணாம கடைசியில நோட்ல கொண்டு போய் போட்டது இட்ஸ் a crime. Okay, so yeah, that and all is not at all acceptable. So we will have our format going. That is number one. Number two, when you look at the suggested answer, sir, ரொம்ப நிறைய எழுதுறாங்க. Okay, they can write, but I am not asking you. Neither I am not saying that you should write as much as institute, right? Nor I am saying leave it. State the obvious, but in lesser words, with a clear that will be more than sufficient. Not that you should reproduce. If you want to reproduce, you have to mug up, which I don't want you to do. We are conceptually clear. We know what to write and we know how to write. That is more than sufficient. Okay. Now, in this question, I am taking some facilities. Wherever an adjustment which I have already written, again, I am not writing the full notes, etc. So, I am taking those things as granted. Okay. Okay, I'm accounting on accrual basis. This 2 lakhs, it belongs to 1920. Okay, it should be taken as income in 1920. Okay. Interest paid to a partner in a representative capacity. Interest paid to a partner in a representative capacity covered under 40A subsection 2. Interest is not to pay him just because he is a partner. He is representing another entity. So, covered under 48 subsection 2. Okay, up to FMV is allowed. It is assumed that 18% is the FMV. So, the whole amount is allowed. What is speculation loss? I'll write it here so that you're clear. Okay, settlement of transaction without actual delivery. Okay, the 8 lakhs, 10 equal installment, 2 installments paid. Okay, 8 lakhs, 10 equal installment, 2 installment paid. Okay, right, 160. Okay, 30% of audit fees of 2018-19, since the same would have been disallowed in that year as tax was not remitted within due date. Okay, 30% of audit fees. So 25 lakhs into 30%. This year it can 2.5 lakh. Huh? Okay. Okay, right, right. I will come to warehousing, etc. a little later. Okay. The firm, okay, 1980, the firm has 4 equal partners. Okay, okay, right, right. Come from, okay, 40 lakh, 45, 300. I'll come to losses little later. Okay, now edible oil. Edible oil is a non-specified business. Edible oil is a non-specified business. Okay, edible oil is a non-specified business. Okay, income from edible oil rupees. Sorry. They were made. Okay, there are 2 construction, 2 warehouses in the rural area, storage of agriculture produce. So edible oil or land building value 12 lakhs. Income from edible oil 5 lakhs. Depreciation at the rate of 10%. Okay, on building, which is nothing but warehouse is a building. Okay, so the building value becomes 12 lakhs. So 12 lakhs into 10%. Okay, so income from edible oil business, it is also more than 180 days. That's why the data have been given. Okay, is 5 lakhs minus 1,20,000. Specified business. Specified business, my dear friends. Okay, the question says, okay, the firm had invested 23 lakhs other than land, excluding cost of land, and earned 15 lakhs. Income, okay, 15 lakhs less, okay, expenditure on warehouse allowed under 35 AD. Allowed under 35 AD is 23 lakhs. Loss from specified business to be carried forward. Okay, okay, we are carried forward and adjusted against income from specified business 8 lakhs. Next year the question இன்னும் இன்ட்ரெஸ்டிங்கா இருக்கும் ஏன்னா 35 AD is optional next year. So you should check whether I can claim 35 AD or go under section 115 and pay the taxes. Okay, next year May order question paper இப்பயே சொல்லிடலாம். These are all going to be for 25-30 marks. Okay, so okay, as chartered accountants you will see your juniors doing writing that. Okay, now computation of மனசுக்குள்ள நினைக்கிறதுலாம் எனக்கு கேட்கும் ஞாபகம் வச்சுங்க. computation of total income. Computation of total income. How many heads are there, business or profession, which we have worked out for 3 different businesses and kept it ready. Okay. In July 2019, I received a dividend. The firm received a dividend of rupees 11 lakhs. Actually, in the adjustment mela payirkano, because it would have normally been credited to P&L. But okay, so 11 lakhs. So I will provide 10 lakh, tax that 1 lakh. Okay, a partner was settled. So dissolution of firm whenever I transfer the asset to the partner, in the year in which it is distributed to the partner, because even though he retired on 31st March 2019, he was settled only in 1920, and by transfer of land, the fair market value, which is the stamp value, will be taken, and the entire thing will be computed. So we have capital gains, we have other sources, we have business. In business, there is a speculation loss which is carried forward, we have returned the note. Specified loss which is carried forward, we have returned the note. This is interesting. What is interesting here? Business loss as on 31st March 2019 is 6 lakhs. There were 4 partners on that date, 4 equal partners on that date, and 1 partner has retired. So his portion of loss cannot be carried forward by the firm. So out of 6 lakhs, only 4 lakh 50,000 can be brought forward and adjusted, not the entire 6 lakhs. Only 4 lakh 50,000 can be brought forward and adjusted. Okay. Share of retiring partner cannot be brought forward by the firm. Okay. So only, okay, 6 lakhs divided by 4 into 3 continuing partners, only 4 lakh 50,000. Whereas this is not applicable for unabsorbed depreciation. This is not applicable for unabsorbed depreciation. What is capital gains here? Full value. Okay, I'll write the theory once. Okay, where a partner is distributed asset on retirement or dissolution, then capital gains arises for the firm. Capital gains arises for the firm. Full value of consideration will be FMV of the asset on the date of distribution, taxable only in the year of distribution. Having this in my mind, full fair market value, that is full value of consideration, that is FMV, is in this question is 26 lakhs. யாரா ஒருத்தர் கொஞ்சம் ஐசிஓஎஸ் சொல்லுங்க ப்ளீஸ். உங்களோட மெட்டீரியல் ஏதாவது பக்கத்துல இருந்ததுன்னா மெட்டீரியல்ல போட்டுக்கணும். நான் நெக்ஸ்ட் ஓகே, பர்ச்சேஸ்ட் இன் 15-16 for 11 lakhs. Okay, 11 lakhs into 289. Can you please tell me 15-16?
254.
252.
254.
254. So LTCG will be, okay, 1348425, okay, which is taxable at 20%. We all know, okay. Okay, other sources, okay, dividend from domestic company, the shareholding law, chumma to confuse us now, okay, adikla, okay, dividend from domestic company 11 lakhs, okay, yes, exempt under in subsection 34, okay, is 10 lakhs. So taxable is 1 lakh. This is taxable under 115 BBDA. Okay. Okay, friends. So 38 lakh 23,725, you know, this is taxable at 10%, this is taxable at 20%, and this is taxable at 30%. Okay, that is assessment of firm for us. Okay, assessment of firm la special provision 40B in business. Okay, interest, now I told you, no, you remember that might be an adjustment. Then other adjustment will be for all other chapters. This is there, and business loss brought forward is there, and it can be an LLP conversion and the matter. Okay, all those things can only be the questions. Never worry, it will be straightforward. Length of the question should not threaten you. You can go through each and every adjustment. You will definitely remember whether it is a case law or whether it is a provision or whether it is a special adjustment which warrants such things. I need a 5-minute time to come back to you. Just give me a 5-minute. Our next area of focus is going to be assessment of charitable trust. Okay, because one sure shot question from here also, and we should be able to crack it without much difficulty. I am starting it from a different perspective. First, I want to look into the case laws. Okay, first I want to look into the case laws of assessment of charitable trust. Okay, which is also questionable area for us. Okay.
Page number 32, sir.
Yeah, thanks. Okay. Right. I want to start with a case law which I feel is a very important case law, which is an important judgment, which has a possibility of a question, which has a possibility of question. Never mind. I have put it in assessment procedure. I have taken that case law. Who can the income tax appellate tribunal provide registration? Registration under 12AA should be provided by PCIT or CCIT. Registration should be provided by PCIT or CCIT. That's what we have, CIT. Okay, that's what we always see. But can tribunal provide? That will be a questionable area. I have it, don't worry. I will discuss it when I come to assessment. Okay, that will be a questionable area is my belief. Okay, okay. What is that we have to study in assessment of charitable? What are all the case laws? Of today class, there is no link for class. It is just that you have to log on to Teams and you will find there is nothing called links. I just saw. I'll answer them separately. So the case laws, the first two case law are already tested twice or thrice. Almost many case laws are repetition case laws only. Institute engaged in institute engaged in imparting higher education or education makes profit. When you say non-profit organization, should it be definitely that it should not be existing for profit? They cannot collect any fees. When I say that this is a free institution, they cannot collect any fees. The Supreme Court has said no. All conditions were fulfilled by the assessee and the profit was only incidental, and such profit is also used for the object of spreading education. So the Queen's Educational Society's exemption cannot be denied. Just because it is making profit, don't deny. Just because it is making profit. இது நம்ம வந்து 12th standard accountancy non-profit organization first line non-profit does not mean no profit. Profit should also be used for the benefit of the trust. Okay, that comes up to Supreme Court now only. Okay, St. Peter's education in the vocational education, certificate oriented education, will it also come under 1023C? Or should it be necessarily government education? There is no requirement for formalized manner of conduct of educational courses. Okay, the institution is established with the purpose of imparting education in the specialized field. When it is clear that the funds are utilized for that purpose, exemption cannot be denied. So there need not be a formalized course. Even any vocational course also you will get the benefit. Society for Promotion of Education, very important case law, which has been repeated, which we know repeatedly. Within 6 months, if the commissioner has not communicated, I can take it affirmative. I can take it affirmative. Okay, it is deemed to be registered. Meenakshi Ammal Endowment Fund, and application be presented immediately also? Yes, it can be presented immediately also, no problem. It can be done in the immediately also, no problem. K-Tree Trust. Friends, I will explain this case now to you. Okay, Mr. X dies. Avaruடைய property through his will, he has given it to a trust. Through a will, he has given it to a trust. Trust they should make the investment under section 11 subsection 5. Say only for certain investments are allowed. They cannot have any other investment. So he also had other investment, shares invest panninda, which he has given to the trust. Will probate pannanom. Okay, then one day I will get it and I can withdraw. Meanwhile, his legal representative filed a case. Okay, so the will was unable to be probated, but It was available in the trust balance sheet as shares. The assessing officer said you have invested in a mode which is not permitted. The trust has not invested. The person who gave the thing to trust, he has invested and it came to me as a will. It came to the trust as will. But it is the duty of the trust to probate the will and take it out and put it in 11.5 investment. But they were unable to do because there was a dispute going on. Properties written in the name of the trust could not be transferred to it due to the ongoing litigation and pendency of probate proceedings. Does it amount to violation of 11.5? The court said no. Validity of the will has been challenged in the probate proceeding. Therefore, till it is probated and affirmed that the trust would not acquire the legal right. Based on the above factual findings, the High Court held there was no violation of 11.5. Okay? Right? This is the mark again, one of the important, in the question law, the assessment procedure or the trust question. That's why I thought I have written it into the, okay? Sir, Secretary of the Trust residence la I am conducting raid. The department is conducting raid in the residence of the Secretary of the Trust. They find some incriminating evidence that the trust funds are misutilized. Can they cancel registration? Trust என்ன சொன்னாங்க, நீ என்ன raid பண்ணலையா? You haven't searched me. You have after all searched one of the trustees. Based upon that, how you can cancel my registration? But the department was able to prove, boss, the entire business of the trust or the activities of the trust was conducted by the Secretary General only. Signatory, Secretary General, all the decisions are taken by Secretary General. So, by raiding him or by searching him, if I find some evidence which proves me that the trust is not going by the books or going by the object, I have the right to cancel. And the court held the department as correct. The court held the department. Cancellation of registration on the basis of search conducted in the premises of Secretary General and the statement recorded by him. Can I cancel the registration of the trust? The entire trust activities were conducted in the Secretary General premises. Further, the statement provided by the Secretary General pertains to the operation of the trust, which has come under the scanner. Hence, cancellation of registration as per the Secretary General statement is valid. Okay? Unquestioned area case law. So, please be clear, there is a possibility. Okay? This is a normal case. Okay? Ramo, is approval of civil court mandatory for amendment of the trust deed where the settlers are given power? Not needed. No? When the settler has given, okay, எல்லாத்துக்கும் civil court போணுமான்னா not needed. Okay? Board of directors, board of trustees, they can. Okay, where the settler has given power and mode by which trust deed can be amended, where all the conditions laid down are followed and the deed is amended, there is no further approval. Only when the settler has not given the permission, civil court intervention is mandatory. When they don't have a board of trustees, otherwise there is no need. Okay, next, friends. For my main friends only. Okay, two alternative answers போட்டுருந்தோம். That is, receipt minus expenditure is equal to income on that 15%. Or the alternative is receipt into 15%. November I didn't do like that. November I had this case law. Okay, but for May batch, now you need not worry. Program for in the case of code பண்ணிடுங்க. Institute material code பண்ண ஆரம்பிச்சிட்டாங்க. Program for community should 15% be computed on income or gross receipt held by the Supreme Court. That 15% is on the gross receipt would be eligible, not on the income. But alternative answer is essential when there is an anonymous donation. அது நம்ம அப்புறம் பார்த்துக்கலாம். Okay, when we do. But 15% gross on the gross receipt. So one big relief for us. this case law. Okay, case law ஞாபகம் இல்லைன்னா as per a Supreme Court judgment 15% on the gross receipt can be claimed போடுங்க. Okay, Govind Bhai, Jitalai, okay, can 80G, okay, if the whether an application for grant of approval under 80G can be rejected on the ground that 85% of the income is not applied. Okay, purpose is different. Okay, purpose is different. The purpose of 80G and section 11 are different. 80G does not relate to assessment. For the non-fulfillment of condition by the donee trust cannot be ascertained at the time of donor making the donation. Hence, the ground of rejection is not acceptable. Hence, the grounds of rejection is not acceptable. Hence, okay, ஒரு மாதிரி இந்த கேஸ்ல again examinationக்கு முன்னாடி நாள், okay, that 2 daysல ஒரு 10-minute round through, okay, run through of the case laws and in the UP Distillery Association, the program of okay, அது ஞாபகம் வச்சுங்க, and a program for community organization. Now again, when we do the solution, we will have the case laws. So let's go to our material, to our workings. Okay, so I will take some time, but I want this computation of income. இது எந்த ஃபார்மட்ல இருக்க போகுது for a charitable trust. Okay, if, sir, your voice is not clear. Can you text me if it is a question? Was a question. Okay, how to compute the income? Okay, income from property held by the trust. இந்த ப்ராப்பர்ட்டின்றது ஹவுஸ் ப்ராப்பர்ட்டி இல்ல, ப்ராப்பர்ட்டிஸ் ஃபிக்ஸட் டெபாசிட்ல வர இன்ட்ரெஸ்டும் ப்ராப்பர்ட்டி தான், ஹவுஸ் ப்ராப்பர்ட்டியும் ப்ராப்பர்ட்டி தான், ஃபீஸ் இஸ் அ ப்ராப்பர்ட்டி. ஓகே, எவ்ரிதிங் இஸ் இன்கம் ஃப்ரம் ப்ராப்பர்ட்டி ஆஃப் த ட்ரஸ்ட். ஓகே, right? So we know that. Okay, I'll take a couple of minutes to explain the base points, so that after that we can go and work it. Okay, voluntary contribution other than contribution forming part of corpus. Okay, voluntary contribution other than contribution forming part of corpus / anonymous donation. Okay, so other than these two I will take it. Okay, any other income. Okay, this together will constitute for me, okay, what is popularly known as gross receipts. Okay, what is popularly known as gross receipts. Okay, so as per the case law, less 15% set apart. Okay, on this I can claim 15%. Okay, money to be utilized. Okay, what I get is money to be utilized, the money that needs to be utilized. Okay, the money that needs to be utilized. Now understand. Okay, actual expenditure. It could be some X amount of actual expenditure I have incurred. Asset purchased. Okay, asset purchased. Even asset will be treated as expenditure. Loan repaid will be treated as expenditure. Okay, utilization. Sorry, asset purchased will be utilization. Loan repaid utilization. Donation to another charitable trust, provided it is not towards the corpus of that trust. It should not be for the corpus of that trust. It should be a registered trust. Okay, donation to another trust is also considered as utilization. Donation to another trust is also considered as utilization. Loan repaid, scholarship given, all these things are utilization only. Either tavara, three things I am coming to. Okay. Income accrued but not received. Okay. It is only accrued but not received, so you cannot utilize. Income received but unable to be utilized. Impracticability is the condition. You received it at the last time. Okay, right? These are section 11.1 அப்படின்னு பேர் இருக்கு. 11.1 part 1 part 2. Don't worry about the which part. Okay, you can apply and get it. Okay. Conditional accumulation. For a capital activity, I am accruing. This is known as 11.2. For a capital activity, I am accruing. All these things are known as utilization. All these things are known as utilization. Utilization is very wide term, and all these things are known as utilization. Okay, then taxable income. Okay, taxable income is that, okay, this money, after money to be utilized, less utilized will become taxable income. Okay, taxable at slab rates. Taxable at slab rates. Remember, a trust is taxable at slab rates. Okay, now I want to write some note on this actual expenditure. Okay, I want to write some note on this actual expenditure. Okay. Okay, if amount is paid without deducting tax at source, only 70% will be considered. Only 70% will be considered as utilized. Okay, as utilized. Okay, if money is paid in violation of 40A subsection 3, okay, then in violation of 40A subsection 3, if money is paid in violation of section 40A subsection 3, then it will not be considered for utilization. Okay, depreciation cannot be claimed. Depreciation cannot be claimed if the cost of asset is claimed as utilization.
So one doubt.
Go ahead.
So the 15% accumulation, the condition, is it even applicable for the business income? Do we have to apply only 15% on the gross receipts and not on the net profit?
Yes.
Okay.
Okay. So this is about the income. Okay. For one quick run through kaga, we will spend some time because trust Allah sure short question. Now the 40 marks if we are able to score, I mean that 70 marks if we are able to score 40, we stand a big chance of getting that exemption. So that's why I want to not miss these small areas, which is sure short question, which is easily. Okay. Now anonymous donation. Okay, 115 BBC anonymous donation. Is it taxable? Yes. Okay, taxable at 30%. Taxable at 30%. Anonymous donations are taxable at 30%. However, okay, anonymous donation up to rupees 1 lakh or 5% of donation, total voluntary contribution, whichever is higher is taxable at normal rates. Okay, more than that only is taxable at special rate of 30%, whereas a 1 lakh or 5% of total voluntary contribution is always taxable at normal rates. Is always taxable at normal rates. Now please extra again understand, okay, there are two school of thought. Okay, the first school specifies that the normal tax will be on the entire amount specified above. That is 1 lakh or 5% of voluntary contribution, whichever is higher. Okay. The second school specifies that 15% set apart can also be claimed on the uh, anonymous donation taxable at normal rates. Okay, so we will give two answers. When it comes to taxation, we will give two answers. One based upon thought one, based upon thought two. Leave it to the examiner. எது correctன்றது debatable issue தான் till today. I feel the first one is correct, but there are enough people who support the second one. So let us not even debate it. Okay, let us give two answers. Let us give two answers for the safety of the examination marks. We'll give two answers. And last note, okay, anonymous donation provisions not applicable for religious trust. Okay, so இதுல question வரலாம், anonymous donationல வரலாம், income computationல வரலாம், taxல வரலாம். Next thing, what is charitable trust and they do business? Okay, what is charitable trust? Okay, can they do business? This takes me to section 2 subsection 15. Okay, charitable trust, okay, includes, okay, okay, education, medical relief for poor, okay, preservation of monuments, preservation of environment including wildlife, okay, yoga, any other object of general public utility, any other object of general public utility. Okay, in this, up to this, okay, free to do business, only condition is 85% to be utilized. Okay, in the first cases they are free to do business, the only condition is 85% should be utilized. Okay, in the case of any other object of general public utility, in this case I am writing under that, in this case I am writing okay, business income shall not exceed 20% of gross income. Their business income should not exceed 20% of gross income. Where it exceeds, then exemption will be lost for that particular year, not for, okay, not permanently. Whichever year you are exceeding, for that particular year, exemption will be lost. Where it exceeds, exemption will be lost only for that particular year. Okay, only for that particular year. Okay, shall not exceed, business income shall not exceed 20% of gross income. Where it exceeds, then exemption will be lost only for that particular year. No point. Okay, yeah, right. Exemption will be lost even if 85% of the business income is used for the object of the trust. So this is also one other question that can come. The other question is case law. Fifth type of question is exit tax. We will work out a question solution for that. Quickly go through. You charitable trust, sure short question. Okay, go through, I'll tell you.
Sir,
Listening.
the surcharge rate for charitable trust
37%.
flat rate.
இல்ல அந்த MMR தானே கேக்குறீங்க?
No, the surcharge that we charge if it
Yeah.
exceeds 1 crore. Do we
okay. Go ahead.
Do we take the EOP slab or the firm slab?
It will be the firm slab, that is 12%. The new slab of 10%, 15%, 25%, 37% is only for individuals, HUF and FIIs, foreign institutional investors. ஓகே ஃப்ரெண்ட்ஸ், ஒரு முக்கியமான நல்ல வேலை ஞாபகம் வந்தது. ஓகே, ஒரு என்ன பொறுத்த வரைக்கும் ஒன் அதர் கொஸ்டின் which is going to be trust உடைய sure short question because it's an amendment which is very interesting. Okay, so far section 12AA gave the permission. The whole of 12AA is amended next year. Okay, new section comes into. Okay, you are the last batch to write 12AA. Okay, the whole of 12AA said when registration can be cancelled. Eppo cancel pannalam when I have not meant for the object of the trust, when I have used it for the benefit of the private trustees, when the trust is doing away from the main activity, investments are not made in the prescribed mode. Okay, idella reasons for cancelling the trust. ஒரு trust வேற ஒரு லாவை வயலேட் பண்ணிருக்கு. A trust has violated not income tax law but some other law, friends. A trust has violated some other law. Can the registration be cancelled? Supreme Court said no. Pass. Law prakaram they have fulfilled 85% condition, everything fulfilled. No, you cannot cancel. Law was amended. Law was amended, and that could be one of the questions. Is again okay, both under 1023C and under 12A, the law is amended with effect from 1st September 19 because the budget was presented late after election. In the existing law, at the time of registration, what needs to be satisfied is with regard to the genuineness and fair nature of the trust. Further, section 12AA prescribing the conditions for cancellation of registration specifies that if the commissioner or principal commissioner is satisfied that the activities of the trust are not genuine or not being carried on in line with their object, then registration can be cancelled. The existing law did not give the authority to withhold exemption at the time application is made or withdraw exemption once provided later where there is violation by the trust or institution of any other statutory law. எந்த லாக்கு வரும் உங்க எல்லாருக்கும் நல்லா தெரியும். இந்த entire provision FCRA, Foreign Contribution Regulations Act. Foreign Contribution Regulation. You would have seen 15 days or 10 days back in the paper. Okay, how many trusts are there in the scanner? 189 trusts or the registration cancelled because FCRA requirements are not properly met. Okay, or any other. So, because foreign contribution is coming through an unauthorized route. The amendment came into effect from 1st September 2009. Provide at the time of granting exemptions, or the granting authority shall get satisfied with the compliance with other laws as well. Okay, not only following our law but other law where the trust or institution has been granted registration. Okay, and subsequently noticed by the granting authority that the trust or institution has violated the provisions of any other law, and such violation is not disputed. If it is an appeal stage, I cannot cancel all. Okay, there I have appealed that you are wrong. Upper cancel பண்ண முடியாது. Where such a violation is not disputed, then CIT, PCIT shall cancel the registration after affording the principle of natural justice to the assessee. Okay, remember this could be a question, could be a possible area of question, and this is carried to the next year in the new section 12AB has replaced the 12AA. Next year படிக்கிறவங்க எல்லாரும் உங்க okay, after you become chartered accountants, I know you will not remember these provisions unless you are in practice and you do trust audit. But உங்களை என்னைக்கா பார்க்கும்போது கூட நான் சொல்லுவேன் அன்னைக்கு நம்ம படிச்சோமே அதெல்லாம் மாறி இருக்குன்னு. Okay, so this is an amendment to remember because it is a questionable amendment. It is a questionable amendment, my dear friends. மறந்திருக்க மாட்டேன் because நான் கொஸ்டினும் அதுக்கு போட்டிருக்கேன். So don't worry. All amendments, wherever it is questionable, I have ensured that I question it also, so that we are clear about this. So remember this: case law, exit tax, or trust law, score it fully. Score it fully. That's our motto. That is the question number 1, which I just drafted for you to understand how the question can be. Okay. Global Mission Charitable Trust, registered under Section 12AA, had spent 92% of its reserve for the object of the trust and has filed the returns within due dates. CIT sought to cancel the registration of the trust as there was violation under foreign contribution regulation law, which the trust has accepted to have violated as not gone on an appeal. The trust represents to you that all the required formalities under the income tax law are fulfilled and there is no power to cancel the registration for violation of other laws. In this context, highlight the provision and provide your opinion. Okay, will your answer be different if the trust has gone on an appeal against the violation cited by the FCRA? So, if it is accepted, violated, and has not preferred an appeal, then the CIT is justified in cancelling. Okay, ஆனா நம்ம இன்ஸ்டிடியூட் அப்படிலாம் நிறுத்திட மாட்டாங்க. என்னடா நாம சார்ட் அக்கௌண்டன்ட் அவன் சிஐடி நாம போய் அவன் ஜஸ்டிஃபைன்னு சொல்லிட்டா நமக்கு ஈகோ வலிக்குமே. Okay, our institute will always have this. Okay, so they will also, I feel, will ask, will your answer be different if the trust has preferred an appeal against the violations I did? So in that case the commissioner is wrong, உள்ளுக்குள்ள ego satisfy பண்ணிக்கலாம். Okay, so it is a possible area of questioning this time because of this new amendment. Okay, so possible area of question. Okay, in the case இதுவும் possible area, இது நான் assessmentல பேசுறேன். Normally registration of the trust can only be granted by Commissioner of Income Tax. Is ITAT empowered to grant registration? Okay, Reham Foundation அப்படின்றதுல High Court has given when ITAT can say, because what is the ITAT's power? Order that can deem fit. Power வந்து நம்ம Commissioner Appealsக்கு power accept, reject, reduce, enhance or cancel the assessment. He cannot order for fresh assessment. இதுதான் அவரோட power, Commissionerோட power. ITAT power, after hearing to both sides of the argument on the fixed dates and after continuing the after going through all the documents provided, it may pass such order as it deems fit. Restriction கிடையாது. So ITAT can grant registration. High Court has now given a ruling. In the circumstances law, you should not give registration. Remand the case back to Commissioner, saying you get. Okay, they have given. I think I have given you that entire case law so that எனக்கு படிக்கும் போதே ஒரு நல்ல case law for our understanding. எல்லாத்துக்கும் மேல questionable case law எனக்கு தோணித்து. Okay, so I have given you the do's and don'ts which the High Court has given in this particular case law. And I will teach all the case laws of assessment again. I mean, teach them. We'll go through all the case laws so that ஏன்னா உங்களுக்கு அசஸ்மெண்ட்ல எல்லாருக்குமே ஒரு சின்ன பயம் இருக்கு. அதை ரிமூவ் பண்ணிடுறேன். ஏன்னா ஒன்னு கேஸ் லா பேசிஸ் கொஸ்டின், இன்னொரு ரெண்டு. Okay, okay. If you see Reham Foundation and the appellate tribunal while hearing an appeal, okay, director, okay, இது கீழே நான் கொடுத்திருப்பேன் இதோட ஜட்ஜ்மெண்டோட full copy. Okay, registration under 12AA can be granted by ITAT but conditional. Circumstances where ITAT can direct registration of the trust without referring the case back to CIT. Circumstances where ITAT cannot grant registration and it has to refer back to CIT. So இது வந்து questionable மாறும்ன்றது என்னோட opinion. இல்ல இது படிக்கலாம் அந்த இது இல்லனா ஏன்னா இது ரீசன்ட் அந்த ஜுடிஷியல் ப்ரொனவுன்ஸ்மென்ட்ல. Okay, I'll come to this in assessment, friends. I will take all the case law quickly once, not so fast, okay, so that you remember that case law judgments. We will just recollect and put it in our mind so that you are more confident about assessment also. Okay, now question number 3. A trust incorporated in April 2019 presented an application in May 2019 itself. Can the application be rejected? No. Meenakshi Ammal Endowment Fund, the application can be presented any time after incorporation. Any time after incorporation. Okay, ஒரே கொஸ்டின்ல நிறைய கேஸ்ல கவர் பண்ணிட்டேன். சும்மா ஏன்னா எப்படி கேஸ்ல சொல்வேன்னு எனக்கு தெரியும். Okay, so any time after incorporation the trust they can apply for registration. Okay, can the application be rejected? No. Within what time CIT has to communicate, and if there is no communication, what consequences? Within 6 months from the end of the month in which application is made, if there is no communication, it is deemed to have been approved Society for Promotion of Finance. It is deemed to have been approved. There are some properties written in favor of the trust, but due to ongoing pendency of appeal, the same are unable to be transferred. K3 trust, no problem. K3 trust, when it is not probated, when the will is unable to be probated, you cannot transfer. 3 case laws we are discussing in this question. Meenakshi Ammal Endowment, anytime you can present the application after incorporation. Society of Promotion of Arts, which says within 6 months you have to communicate, otherwise the assessee can take a deemed communication, and there is an ongoing pendency. Okay, if the will is not probated. K3 trust. K3 trust. In the question number 3 ல ஒரு extension பார்க்கலாம் நம்ம இப்போ. Okay, grant of registration. Okay, application made, okay, on 1st January 2020. Application made on 1st January 2020. Okay, CIT grants approval May 2020. Which year approve I can claim exemption? For which year I can claim exemption? Enarajatin, which year I can claim exemption? From which year?
Sir, financial year.
Financial year?
Which application is made, sir?
1920. Okay, 1920. So exemption can be claimed from 1920 because I have applied in financial year 1920. Even though the grant is after that, I can apply. இதுல ஒரு சின்ன change கொடுக்கிறேன் பாருங்க. Okay, application made 1st Jan 2020. CIT doesn't communicate. Okay, end of 6 months, deemed approval. Okay, exemption can be claimed only from 2021. Deemed approval, okay, only for commissioner granting exemption, you will from the date of application. This is deemed approval. Deemed approval is only from the corner of the law. So the MCQ you should crack it. So remember, if it is deemed approval, only from the year in which I am supposed to get the year in which the approval gets deemed. Whereas if it is commissioner on the basis of records gives me the approval, it is the year of application. Okay, right. Question number 4. Wherein in Queen's Educational Society, this was a direct question from examination. Question number 5. Under what circumstances exit tax can be levied? Hold it. I will do it exit tax along with the question. I will answer question number 5 also. Question number 6. An institution having advancement of any other object of general public utility as its main object is registered under 12AA. If its total receipt is 50 lakhs, out of which receipt from trading activity is 15 lakhs, would the institute continue to retain the status of charitable trust, be eligible for exemption under section 11 under 1920 if it applies the receipts from trading object for its main activity? Discuss. What would be your answer if it is yoga? கமா போடுங்க சார் அப்படின்னு எனக்கு சொன்னதே நம்ம டிஜே தான். ஓகே, அவன் சொன்ன என்ன சொன்னாலும் கேட்டே பழகிட்டேன். ஏன்டா கமா போடணும்னு? இல்ல சார், கமா போட்டாதான் ஸ்டூடெண்ட்ஸ்க்கு தெரியும். ஓகே டிஜே, நீ சொல்லிட்டா நான் பண்ணிடுறேன் அப்படின்னு. Okay, so 20% of total receipt is 10 lakhs. Since the actual receipt from business is more than 20% of total receipt, the entity is liable to, the entity will lose exemption for the year 1920. For the year 1920, the entity will lose exemption irrespective of the fact that the business receipt is used for the object of the trust. Okay, since the actual receipt from business is more than 20% of total receipt, the entity will lose the exemption for the year 1920 irrespective of the fact that the business receipt is used for the object of the trust. Okay, however, the entity will not lose the charitable, will it lose the charitable status? Okay, it is only exemption for 1 year will be lost. Subsequent year, if it is just fulfilled, fine. So it will not lose the status of charitable trust. It will only lose the exemption for that particular year. Okay. There is no restriction of 20% of businesses in the case of the other things. Kamala Charitable Trust, having its main object as medical relief, earned the following income during the financial year, I should have changed, 1920. Dividend income, income from mutual fund, agricultural income. The trust claims exemption under 10.1, 1034 and 1035 in respect of its agriculture income, dividend income and income from mutual respectively. Without complying with the conditions, it is not correct. It is not correct. Okay. Okay, the guiding provision is section 11. This section specifies that 85% of receipt should be utilized. This section specifically says that 85% of your receipts should be utilized for the object of the trust. The term receipt will also include all exempt incomes. The term receipt will also include all exempt income. Hence, the trust needs to utilize 85% of exempt income as well. Okay. ஒரே ஒரு exemption தான். However, agricultural income will continue to be in the hands of the trust even if it is not utilized. Okay, agri income will not be taxable. இப்போ கொஞ்ச நேரத்துல exit taxல கூட you will see that agricultural income comes. Okay, even in exit tax you will see that agricultural income will come. Okay, in that case it will not be so. In that case it will not be so. Question number 9. Okay. A charitable trust gives you the following particulars. Compute the income and the tax. Income from property held under trust. Voluntary contribution including 10 lakhs for anonymous donation. Expenses in relation to earning such income. Conditional accumulation. Income accrued but not yet received. Purchase of asset, donation to another institution with the condition that it will form part of the corpus of the trust, brought forward losses. Brought forward losses. Read through. We do the tax also. Computation 1 minute. We'll do the tax also. Okay. I'll do it in absolute value. 1 lakh, 1 crore, 46 lakh, 32,000. Okay. 1 crore, 46 lakh, 32,000. And now going to utilization. Expenses in relation to earning such income. Conditional accumulation is normally for a maximum period of 5 years, but lesser period can be given. It is only maximum period. At the end of the period, if any amount is unutilized, such amount becomes fully taxable. Such amount becomes fully taxable. Okay, here only I want to work out and show you two options. Here only I want to work out and show you the two schools of thought. Okay, first let us take total anonymous donation. Okay, 10 lakhs. Total total donation, okay, total donations is 32 lakhs. Okay, 5% of total donation comes to 160. Maximum, okay, minimum normal rate is 1 lakh. So whichever is higher is taxable at normal rates. So okay, amongst these two, whichever is higher is taxable at normal rate. Okay, so anonymous donation taxable at 30% comes to 10 lakhs minus 1 lakh 60,000. 10 lakhs minus 1 lakh 60,000, 8 lakh 40,000. Now I am computing tax. Option 1. All of the anonymous donation taxable at normal rates, okay, is considered. Okay, so income taxable at normal rates will be, please understand, 39 lakh 17,200 plus 1 lakh 60,000. Whole of the anonymous donation taxable at normal rates is considered. So 39 lakh 17,200, which is the total income without considering anonymous donation, and anonymous donation taxable at normal rates becomes 1 lakh 60,000. So 40 77 200. 40 77 200. Okay, then the tax will be, okay, the similar rate. So you all know, minus 10 lakhs into 30% plus 1,12,500. Okay, so 30 lakh 77 200 into 30% plus 112,500. Okay, anonymous donation at special rates will be 8,40,000 into 30%. 8,40,000 into 30%. So my total will come to, okay, my total will come to 12,87,660. Okay, and HEC at 4% and HEC at 4%. So this into 4%. Okay, my total tax payable, you can round it off in examination. Please round it off in examination. Okay, right? 13, 39, 166, 170. Okay, my total tax payable comes to 13, 39, 170. Okay, when I look into option 2, where it says, okay, 15% set apart is also available for anonymous donation taxable at normal rates. So only 85% of the normal rate AD will be taken. Okay, will be considered. So same, my dear friends. Okay, same manner I'm going to work out. Here it will be, my dear friends, 39 lakh 17,200 plus, okay, 1,60,000 into 85%. 1,60,000 into 85%. This will be the same 8,40,000, and the tax will be less. Okay. Okay. Next. Question number 10. Edu All Charitable Trust, registered under 12AA, following cash system of accounting. It's an examination question, which is interesting. Furnishes you the following information. Gross receipts from hospital 200 lakhs. Okay. Gross receipts from medical college 95 lakhs. This is exempt under 1023C. According to section 1023C, educational institution, hospitals, government funded institution, if the turnover does not exceed 1 crore, fully exempt 1023C. Okay, this is exempt under 1023C. Medical, that is education, hospital, and government funded institution. 51% or more should be funded by government. For them, 1023C, if the turnover does not exceed 1 crore. Here it is 95 lakhs exempt. Corpus donation by way of check 42 lakhs and by way of cash 6 lakhs. Corpus donation na cash na vaangalam. For the lender, for the donor, he will not get 80G. That's okay. I can then receive it in cash. There is, as of today, there is no law which prohibits me receiving in cash. I need to maintain detail of the donor. I need to file my annual report. All these things fine. But as a trust, I can receive it. Anonymous donation 12 lakhs. Administrative expenses for hospital 75 lakhs. Out of this, 5 lakhs was paid without deducting tax at source and 1 lakh was paid on a single day. Fees not realized from patient 18 lakhs on 31st March 2020. I like to be honest with at least good friends. Okay, my honest thing is I took it when I did it in the classroom, not now, Munadi. I took it, but without understanding that they are accounting on cash basis. So they would not have considered this income at all. I income accrued but not received in the 18 lakhs minus pannidakudadu. I did the mistake, and no doubt, but later now I understood from the suggested answers, which is correct. When they are accounted on cash basis, why should I reduce this? Okay, so it is an irrelevant information from the question. Depreciation on asset of the trust 3750, the entire cost of 250 lakh claimed as application, so I will not allow it. Acquired a building of 80 lakhs on 1/6 for expansion of hospital, cost of land therein 50 lakh, stamp value of the land and building on the date of registration of sale deed is 210 lakhs. Okay, for a trust, this section 56 is not applicable. Inadequate consideration is not taxable for a trust. Okay, okay, so it is not considered as, the difference is not treated as income. The trust gave a corpus donation of 19 lakhs to help aid trust having object of charitable nature, but not similar to the object of the donor trust, not a problem. You are required to compute the total income of the trust and its income tax liabilities in such a manner that it can avail optimal benefit within the four corners of the law. True. Okay, right? Hold it. Okay, you are going to work out tonight. Okay, question number 10. Okay, okay, that is your question. Okay, 1 minute. I want to. Because I thought I will cut and paste it here and put it here so that it will be useful for you. Okay, it will be useful for you. So while once you can read the theory and see also, so I'm cutting and pasting the provision in our revision material so that you are clear. Okay. Concept of exit tax. Why this concept became popular? Because of the simple aspect which is going around. I am cancelling lot of registrations. The existing government is coming hard on trust. Okay, they are cancelling lot of registration. So what happens? If you cancel the registration, they are trying to merge with another trust. They are trying to merge with another trust and they are voluntarily winding up. Anam, இந்த voluntary winding up பண்ண tracks பண்ண மாட்டேன். எப்போ you transfer your assets and liabilities to another trust. I'm taking it little detail because I want you to remember. That's why. Okay, to recollect and remember. So you should transfer it to another trust with similar object. Fine. If not, I am going to come hard on you. Okay. There are some circumstances. Exit means no more you are enjoying the charitable. You are coming out of charitable trust. So concept of exit tax. In the following circumstances, exit tax becomes payable. Where the registration of the trust is cancelled by CIT, PCIT, which is, that's why repeatedly the questions are coming in this, because lot of trust registration are cancelled with the law getting more widened. Other law even if there is a violation of other law, the trust will, okay, all the more. Where the trust deed is modified in such a manner, object undergoes a change from the previous object. Where the trust amalgamates with another trust which is not registered under section 12AA, where the trust is wound up and has not distributed is uttered to another registered trust within 12 months. Within 12 months, you should register. Okay, in these circumstances, exit tax becomes applicable. So these are all the circumstances of giving you exit tax, my dear friends. Repeating this provision from the top. Okay, where registration is cancelled, where the deed is modified with a change in the object. Originally, I gave it for some other object, which is also becoming violent now. Trust amalgamates with another trust which is not registered under 12A. Trust is wound up and within 12 months you transfer the assets and liabilities to another trust, I believe. Okay. Exit tax, how it needs to be concerned. Okay. According to 115, I thought Manasa, you are asking this, that's why I answered that. Okay. According to section 115 TD, exit tax is MMR, maximum of everything. MMR stands for maximum of everything. Maximum of tax rate is 30%. Maximum of surcharge rate is 37%. Maximum of HEC single rate 4%. So maximum of everything 42% is the exit tax rate. Exit tax is payable on accredited income. What is accredited income? Gross value of asset on specified date. I will come back to specified date. Less liabilities pertaining to such asset. Repeating, gross value of asset on specified date, less liabilities. Assets, what is the gross value? For immobile property, stamp value or FMV, whichever is higher. Stamp value or FMV, whichever is higher. For other assets, fair market value. For investment, average rate on the specified date into number of securities held. Average rate is nothing but opening rate plus closing rate divided by 2. Opening rate plus closing rate divided by 2 into number of securities. For unlisted securities, net worth basis value. Net worth of the company divided by number of shares into the shares held by the trust. The following assets will not be included. As I told you, agriculture, I will never want to tax. So, asset acquired out of agricultural income, which is exempt under 10(1). Asset acquired before grant of exemption. Suppose if 9-10 onwards, I am operating, 14-15 only I get the exemption. So 9-10-10-11-11-12 till 14-15, whichever years are there, in those years if I have purchased, tax kattiyachu. Okay, so don't ask me to pay exit tax. So the assets will not include assets acquired out of agricultural income, which is exempt under 10(1), asset acquired before grant of exemption under 12AA. Liabilities, only those liabilities which pertain to the asset which are included in the gross asset can be. If suppose for this asset there is a liability, you should not reduce. When okay, simple concept. When the asset itself, we have been doing like this. Okay, when it is not even taken on the top end, don't reduce it. Don't reduce any liability in the bottom. Okay, only external liabilities should be reduced. In other words, corpus funds, reserves, and surplus are not to be reduced. Any contingent liability not to consider and tax liability is not considered. நீங்க specified date சொன்னோமே என்னது? Okay, we are saying no. Okay, stamp value on specified date. Okay, it should be transferred within the specified time, specified date. What is that specified date? Okay, in case of cancellation of registration, date of cancellation. In case of modification of object, date of modification. In case of dissolution, I told you, trust is liable to distribute within 12 months from the date of dissolution. If not, then it becomes taxable. Okay, if it is amalgamated with some other trust which does not have this object, okay, which is not registered, then date of merger. These are the specified dates, and these are all the values on which exit tax will be computed. These are all, okay, all the values on which exit tax will be computed. Okay, becoming a fancy area of question, which I also understand the necessity of questioning, because a lot of trust registration gets cancelled. Almost every 6 months, a lot of trust registrations are getting cancelled. Okay. Question number 11, a similar question in RTP November 20 also. So, okay, supporting the girl child, a charitable trust registered under 12AA of the Act on okay, of the Act. On 1/4/2019, it got merged with Messrs. Ananya Private Limited. So it's a company with which it got merged, which is a company manufacturing of stationery items. All the assets and liabilities of the erstwhile trust became the assets and liabilities of the company which is not registered, which cannot be registered. The trust appointed a registered valuer for the purpose of valuation of assets and liabilities. From the following particulars, calculate the tax liability in the hands of the trust arising as a result. Stamp value of land held 15 lakhs. However, if the land is sold in the open market, it will fetch 17 lakhs. You can see the provision. It says stamp value or fair market value, whichever is higher. The book value is 20 lakh. 75,000 equity shares in a listed company. The lowest price is 75, highest price is 85. Book value was at 67 lakhs. Okay, book value, listed company book value kadiyadu. Okay, opening or lowest plus highest divided by 2 into number of shares. 55,000 shares in preference shares in another company. The shares will fair market value 44 lakhs. Okay, if sold in the open market. Corpus fund 15 lakhs. Outside liabilities 90 lakhs. Provision for taxation 5 lakhs. Liability in respect of various utility bills 6 lakhs. Give the reason for each item. Give the reasons for each item. Okay. A very, very, okay. In the my question, twice or thrice it has been repeated. Sometimes they will include agricultural assets, sometimes they will not. Okay, remember the methodology of computation. That is very essential. Based upon the methodology, you are working out this question also. Question number 10 and 11 are for you to munch tonight before going to bed. Please work out completely. I know the answer is there in your notebook, but I'm not going to rely on that answer. Please work out once more, okay, on question number 10 and 11.
Sir,
Go ahead with your question.
two things. First one, the when the concept of exit tax is applicable, we have the first case, right, where the registration is cancelled or trust deed is modified.
Yeah.
For the specified date, in the notes we had written period for filing appeal is 60 days. Therefore, it is expiry of 60th day. Is that no longer there?
No, it is there. The date for computing the value of the asset தான் நான் இங்க கொடுத்திருக்கேன், but it is very much there. If they give you 2 dates after 60 days or this, you take after 60 days. It is very much there.
Okay, sir, and question number 10, where you were talking about inadequate consideration.
Yeah.
When we did the sum, we
Yeah,
have taken it as, is it no longer applicable?
Yeah, please don't take it. I think I did a mistake. I then corrected it. Please don't take it.
Okay, so we have to ignore it completely.
Yeah, completely ignore it. It is not an income.
Okay, thank you, sir.
Okay, please work out question number 10 and 11. Okay, I will meet you tomorrow morning. Okay, I have a visitor, that's why I'm closing. Okay, I will meet you tomorrow morning. Okay, 6 o'clock dot. We are going to start. I will just give you the hints of these questions if at all you are not able to do. Okay, I will start with capital gains. Tomorrow's agenda: capital gains, assessment of companies. Okay, if we are able to do these two things, okay, that itself is a huge, humongous task. Okay, right. I will also want to tell the classroom one more thing. Okay, I keep on tomorrow again I'm going to work on material. I have completed up to assessment procedure, some more assessment procedure. After that I am going to do penalties, assessment of individuals, and then go in for international taxation. Okay, if you want, sir, I want 1 or 2 more questions in this particular topic. You can always be dynamically interacting with me. If possible, if time permits, I will definitely incorporate it in the material and provide. Remember, 1 full day is going to be for assessment procedures. 1 full day, or even let it take 1.5 sessions, I don't mind. I'm going to repeat all the case laws, quickly browse through the case laws, and also I'm going to provide you with solutions for various questions in assessment procedure. When I say assessment procedure, I include penalties, everything over there, and give you the entire framework. And also TDS, exhaustively we will work. Charitable trust, TDS, firm, companies, PGBP, capital gains, international taxation, we should mark it as 60 and keep it. Meet you 6 a.m. dot, Manasa, 6 a.m. dot tomorrow morning. All the very best.
So just one request.
Yeah.
Sir, the Excel motto, can you upload it in Teams so that PGBP yoda answers சிலதை ரெஃபர் பண்ணிக்கலாம்?
சார் கண்ணு முன்னாடியே அது எங்க இருக்குன்னு இப்பயே உங்களுக்கு அனுப்பிச்சிடுறேன் சார் லிங்க். Okay, you are there in the group, right?
Yes, sir.